Anthony Grasso here, bringing you financial news that you can use. In this particular video, I'm going to do a stock analysis on Paycom. Is this all-in-one payroll human capital management software worth investing in right now? Going into possibly a deep recession, who knows? Well, let's find out together. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and then I'm going to finally give it my buy, hold, or sell recommendation with my thoughts for both your long-term and short-term growth investors out there. And as always, folks, don't forget to smash that like button down below. Definitely helps. And consider subscribing. Hit that notification bell for like your daily stock reviews and recommendations from an unbiased source. So let's get right into it. So this video is always brought to you by Webull. It's an online brokerage trading platform where you can buy stocks, options, ETFs, and cryptocurrencies. If you sign up today and deposit any amount, you can get up to 12 free stocks by using my referral link in the description down below. All right, so Paycom Software provides cloud-based human capital management, which I will call HCM solutions, delivered as a software as a service for small and mid-sized companies in the United States. It offers functionality and data analytics that businesses need to manage the employment lifecycle from recruitment to retirement. Now, the company's HCM solution provides a suite of applications in the areas of talent acquisition, including applicant tracking, candidate tracker, background checks, onboarding, e-verify, and tax credit services, and time and labor management, such as time and attendance, scheduling exchange, time off requests, labor allocation, labor management reports, push reporting, and geofencing, geo-tracking, microfence, and proprietary Bluetooth. Woo, that's a lot. Its HCM solution also offers payroll applications comprising of better employee transaction interface, payroll and tax management, Paycom Pay, expense management, mileage tracker, fixed and variable rates, garnishment management, and GL concierge applications and talent management applications that include employee self-service, compensation budgeting, performance management, position management, and Paycom learning and content subscriptions, as well as My Analytics, which offer employment predictor reporting. In addition, the HCM solution provides a manager on the go that gives supervisors and managers like the ability to perform a variety of tasks, such as approving time off requests and expense reimbursements, direct data exchange, Ask Here, a tool that direct line communication to ask for work-related questions, document and checklist, government and compliance, benefits administrator, benefit to carrier, COBRA administration, personnel action, performance discussion forums. This list goes on and on, guys. So they do a lot. So it's definitely a good all-in-one solution. It was founded in 1998 and is headquartered in Oklahoma City, Oklahoma. So let's go ahead and look at some of the major news of the past couple of weeks of this company. So the company announced that they increased and extended the ongoing stock repurchase plan it's such that $1.1 billion is available for repurchases between August 15th and August 2022 and August 15th, 2024. Prior to the increase, approximately $550 million was available for repurchases. Now, they are increasing, he said, the CEO, Chad Richardson, said, we're increasing our repurchase program to position us to opportunistically take advantage of market volatility and dislocations in their stock. Now, Paycom's long-term growth opportunities, strong balance sheet, and predictable cash flow give us the confidence to be aggressive buyers of our stock if market conditions warrant and return value to stockholders. Now, I have to notate this, though. Share buybacks can create value for investors in a few ways. I mean, repurchases return cash to shareholders who want to exit the investment. With a buyback, the company can increase earnings per share, all else equal. The same earnings pie cut into fewer slices is worth a greater share of the earnings. So that's definitely good news, I think. So let's go ahead and look at some of the fundamentals of the company right now and how well it's doing on its financial side. All right, so the current company is currently trading at $369.83 a share with a market capitalization of roughly $22.3 billion. Now, the company is projected to have $1.3 billion of revenue for 2022 with positive $261 million in earnings. Now, their revenues are projected to increase over the next few years to around $2.01 billion by the end of 2024 with a positive earnings of $417 million. So this is definitely good news. Now, let's go ahead and look at some of the key measures of this company right now. Let's first look at the valuation analysis. So because Paycom is in the software industry and has positive earnings, the price to earnings growth and the price to earnings ratios are the most appropriate valuation measures. The price to book ratio is excluded because it likely underestimates the company's book value by overlooking hidden assets such as intellectual property. The price to sales ratio is not as meaningful as the PE or the PEG ratio due to the company's positive earnings. Therefore, Paycom seems expensive right now with a PEG value of 3.89 times above the industry median of 3.1 times, although their PE ratio is 101 times, among the highest in the industry right now. And if you look at the share price versus fair value, now that's looking at future cash flows. For this estimate, use the discounted cash flow model. Paycom at $369 is trading below our estimated value of $429. Now let's look at the profitability of this company. Based on its gross margin, operating margin, and net margin, the company converts a large percentage of its revenues to profits than most of the other companies in the software industry. Furthermore, the company is profitable with an operating margin of 25.6%. It definitely has a growing profit margin. Its net profit margins are higher than last year's. So it doesn't pay a dividend like most of its peers. And let's look at the growth numbers. The earnings growth at Paycom outpaced revenue growth over the past trailing 12 months. This trend is not sustainable if profits continue to grow at this rate. However, the results are better than at the average company in the software industry. They do have high growth earnings. The earnings are expected to grow significantly over the next 3 years. And the earnings have grown about 13.1% per year over the past 5 years. The earnings growth over the past year of 35.3% exceed the 5-year average of 13.1% per year. And finally, looking at the financial strength of this company, the short-term assets of $3.8 billion exceed its short-term liabilities of $3.6 billion and its long-term liabilities of $329 million. Paycom has a lot more cash than its total debt, and it's been reducing the debt. The debt-to-equity ratio has reduced from 23.8% to 2.9% over the past 5 years alone. And the debt coverage, now Paycom's debt is well covered by operating cash flow of 1,178%. And the interest coverage, they earn more interest than it pays. So coverage of interest payments is not a concern. But it is important to note, though, the insiders have sold shares more than they've bought them in the past 3 months. And shareholders have not been meaningfully diluted in the past year, which is good. So what do the analysts specifically say regarding this company? Well, the current consensus right now is a buy recommendation, with 42% saying buy and 26% saying strong buy, with 31% saying hold. Now, the target stock price for this company is $397 a share, with a high end of $450 and a low end of $339 a share over the next 12 months. And then going over a few of the analyst reports that I found out there, the Street Quant Ratings has a hold recommendation on this company. And that's the primary factors that they looked at that were mixed, some indicating strength, some showing weaknesses, with little evidence to justify the expectation of either a positive or negative performance for the stock relative to the other stocks they look at. The company's strengths can be seen in multiple of areas. It has robust revenue growth in earnings per share, and increase in net income. Now, however, as a counter to those strengths, they also found weaknesses, including a generally disappointing performance in the stock itself, premium valuation, which I can agree with the premium valuation, and a weak operating cash flow. Now, the Ford Equity Research Report also has they have a hold recommendation on this company, and they project Paycom will perform in line with the market over the next 6 to 12 months. This projection is based on their analysis of 3 basic characteristics that influence common stock performance: earnings strength, the relative valuation, and recent stock price movement. And finally, the CFRA report kind of changes the corner and says we're a buy recommendation on Paycom, and they remain bullish on the long-term fundamental setup of the shares. Even after the more recent recovery of the shares, Paycom came out the other side of the pandemic in an enviable position due to the structural advantages from its single source database and ample headroom to move up market to fast-track client growth. Long term, they think, as CFRA thinks, that Paycom will expand its share of the payroll processing addressable market, which remains low at only 5%. They only have 5% of the market right now. and could come at an expense of traditional peers that rely on multiple sets of licensed software. Now, industry dynamics also remain a tailwind, though, as future increases to the federal funds rate will provide a boost to client fund interest revenues and gross profit. $4 million, $5 million for a 25% basis point rate increase, which have yet to be fully factored into these estimates. So let me bring it back over here. So what are my recommendations on Paycom? Here are my thoughts. Now, Paycom has enjoyed continued momentum in the second quarter of 2022, with a combination of strong sales execution and a further skew up market driving a robust 31% year-on-year increase in revenue. Paycom's employee self-service centric offering continues to attract new clients, and greater module uptake has supported higher revenue per client. You got to have those add-ons. You bring them in with one software and you say, we got this add-on, we got this add-on. You just entangle them with all those modules. Now, Paycom's unified platform appeals to mid-size and enterprise clients that prefer an all-in-one payroll and human capital management solution. Now, the company's platform is supported by a single database, which provides that single source of truth and allows efficient software development and maintenance, which makes it a lot easier. Unlike the competitors right now, the Paycom discourages data integrations to third-party providers that instead incentivizes clients to contain their human capital management solutions within its unified platform by offering just the add-on modules, including time and attendance and benefits administration, which is great, I think. In addition, new clients may consolidate their payroll and HCM solutions from multiple providers to an all-in-one solution by Paycom. Now, the company is squarely focused on driving a greater automation and employee self-service, supported by complementary analytics tools for clients and the recent rollout of its self-service payroll module, Better Employee Transaction Interface, or Betty. I like Betty. So I expect Paycom will continue to take market share away from its competition in the growing payroll and HCM market through industry consolidation and capitalization of the shortcomings of its competitors. Now, the company has reported impressive growth to date. Now, this means that they're able to win clients while demonstrating how the cost and efficiency benefits, streamlining payroll and HCM solutions to a single platform can overcome inherent client switching costs, because that's the biggest factor. Is like, I have this archaic system and I can't move it because I got 1,000 employees and it's just impossible. Well, they're able to do it, which is amazing to me. And also, the labor markets right now, they definitely remain resilient, even though, like, I'm surprised about that. Now, management estimates that Paycom has captured only 5% of the total addressable market. So based on all that information, I am a buy recommendation on Paycom. And I put a 12-month price target of $400 a share. I think that buyback is going to stabilize the share prices over the next year. So I think, sum it up by saying it has an outstanding track record with a flawless balance sheet. Now, there are risks to my recommendation though, so I'm gonna go over those. Don't worry, you know, those bears out there on this, because there's a good reason to be a bear. Now, if there's a deterioration in macro and employment trends, which we haven't seen yet, unfavorable regulatory outcomes that alter the competitive environment in specific labor markets in the different states, and pricing pressure from established peers like automatic data processing. Now, Paycom does makes money through fixed fees per software product and variable fees per employee. That means the company would struggle if unemployment were to spike, and simply because revenue would drop as inflation, customers reduce headcount. Now, given the state of the economy, inflation is at a 40-year high, and the Federal Reserve is raising interest rates at an aggressive pace, and they're going to raise it probably 75 basis points on Friday. A recession, a deep recession, is possible in the near term, which would certainly mean higher unemployment. Now, so if you're buying into Paycom, that's the key measure I would look at if I were to dip back out of it. So I think it's a great buy right now, but if those key measures and unemployment numbers are like just taking a nosedive, then I would possibly take this out of Paycom. but I'm not too worried about it right now. But just keep your eye on the monthly basis on those key unemployment numbers. Now, there's also a risk to fierce competition, competitive competition pressures to limiting pricing growth and force Paycom to maintain high investment in its software development and innovation. But I don't see that much money having to be invested for development innovation. Is maintaining and adding modules, maybe perfecting each module, but they don't have to completely redesign a module. They have it there. They just have to, every year just update it. They're not reinventing the wheel. So I think that I'm not too worried about it at all. So there you have it, folks. And as always, don't forget to smash that like button down below. Definitely helps. And consider subscribing. Hit that notification bell right there. Yeah, that's the one. If you like to see daily stock reviews and recommendations from an unbiased source. Until next stock update video later today. Ciao.